A lot of people are asking the question, is Wolf Capital legit? As an inquisitive mind, I would take it even a step further, asking a more complex question. Now, Wolf Capital started off with a guaranteed 2% yield per day for just staking your USDC. They quickly deteriorated that business model to 1.5%, where it stayed for many weeks and months. They soon pivoted it again to the return of 0.8% with a capacity return of at most 1.1% on your money every single day. And as quickly as they took that return down to 0.8%, they turned off the withdrawals and compounding abilities, as well as doing away with their quoted 0.8% return daily. Now, this is not their first endeavor. Their team members have been linked to at least 4 previous failed projects. Travis himself has been involved with and quoted himself as being the CEO of 2 non-existent companies, WC Miners and WC BUSD Miners. Both of these projects failed within weeks, plummeting to zero due to failed economics. 0x Aura has been linked to 3 projects in his past. The first more recent project, one being WC BUSD Miners, the second one being wolfcapitalnft, and the third and final one that we know of that no one can seem to find anything about is Mountain Miners token. Every single one of these projects were based on lies and deceptive practices, telling their customers that they are mining coins that have no ability to be mined because they are validation chain coins like BNB, or just straight up tokens that do not get mined like BUSD. But one thing they did find out in their previous endeavors was that if you promise people a high enough return, the money will start to pour in, whether or not your business model is actually legit. So my question becomes, was Wolf Capital a very orchestrated and predictable bait and switch that was calculated and utilized to bring in almost $1 million to the founders under the guise of high promised returns that are now no longer applicable? I think that's a fair question, and that is the question that you will need to answer for yourself. And lucky for you is the exact information that this video is going to be providing to you in order to make your own inferences. But obviously, before we get into all of that, make sure that you smash that like button. Make sure you hit subscribe, boom, bang on that notification bell. Comment anything that you want in the relevant section. I appreciate it. Now, let's touch on that question that was posed in the intro and add some context to it. You know, the bait and switch that led to a 40% loss of funds that were quoted to be secured and withdrawable. We get you in, we guarantee you 2%. All you have to do is stake your USDC. We take it down almost immediately to 1.5% as the cash flow starts to grow. Then, seeing the cash flow starting to leave the protocol and not being able to keep up with those outflows, we take it down to 0.8% with a cap of 1.1%. We implement lotteries. We implement all of these different business models like a coming casino, a coming blockchain, a coming token, all of these ruses to keep you occupied and looking toward the future. Then we turn off withdrawals and we turn off the ability to compound. We take your claims out a week. That way we can keep up with the outflows that are coming. This is exactly what happened with Wolf Capital. And they actually lost 40% of the funds that people had deposited. And you know who didn't lose any money? The people that ran it, that took the 10% right off of the top of everybody else's deposits, to the tune of about $1 million. Now, what's new in the business model? Variable returns. You can only claim in increments. Why? Because last time the contract got drained twice in one day. Oh, and they're actually penalizing people for that. That $100,000 they got unstaked is coming out of your profits, by the way. Sounds fair. Penalize us for the mismanagement of funds. Makes sense. Isn't this like the second or potentially like the third time that this has happened? I mean, check all the screenshots where your community was absolutely freaking out about this because it happened twice in one day. Good thing you made sure to fix that by only making funds available a week after the requests were made. That was actually a good pivot. This week's profits are actually last week's trades. You can only withdraw if you submit a request, then you can get it a week from now. You can only claim profits and get them back a week later. Same thing with unstaking your principal. So here are the recent developments. Wolf Capital, you stopped withdrawals. You are now taking anywhere from 10 to 20%. Sure, this is variable too, I guess. of your profits every week to withdraw because your Ponzi gap has increased substantially to the tune of about 40%. Meaning that if everyone wanted their money back, you would only be able to pay them 60% of the money that they deposited. And don't come at me with the guise of, oh, people have already ROI'd. Doesn't matter. Don't tell them that you're going to keep their capital secured 100% and that it is backed 1-to-1 if it's not going to happen. You also charge 10% as soon as those people deposit. You then tell people if their stake is open to withdraw, they've already ROI'd. That would actually be wrong because you lock it for 60 days. 1.5% times 60 is only 90%. When they first deposit $100,000, it would actually only be $90,000 in their deposit because you're actually taking the other 10K off of it, the 10%, and they're only making 1.5% every day on that 90K. That means they would make about $1,350 per day. That's only $81,000 over a 60-day period. They're still down by 19K when they have the ability to withdraw. Then you charge them 40% on their deposit or what their deposit was worth, and that makes that deposit worth at best 60K. If they claim it, they only recover 60% of their total deposited funds when they were promised 90% over a 60-day period plus their stake balance of $90,000. Obviously, minus the 10% that you took right off of the bat. $60,000 plus $81,000 is $141,000. So they made 41% potentially, right? Because we know this isn't happening now, on their 100K deposited when they were promised a 90% return. This is why you don't promise people returns, and this is why promising people returns in America and every other civilized country that has financial laws is illegal. 0.8% to 1.1% makes this even worse. 1% times 60 days, the lockup period, is 60%. When they first deposit their 100K, it goes down to 90K because you take the 10%. That means they would make about $900 per day. Let's assume that you're giving them 1%. That's only 54K over those 60 days. So they're still down $46,000 when they have their withdrawabilities after the first 60 days. That's assuming you don't turn them off again. Then you charge them 40% on their deposit, at least what their deposit was worth, and that makes their deposit worth at best $60,000. And that's if you're taking into account the entire deposit. If they claim it, they can only recover 60% of their total deposited funds. And let's be real, 60% of 90K is actually only 54K. We're actually giving you the benefit of the doubt, assuming that you're going to pay them out on the actual full deposit before you took the 10%, but I'm sure you're not. At best, 60K plus 54K is $114,000, meaning that if they did this, they made 14% on their $100,000 deposited over those 60 days when you promised them that they were going to make 90% at first. Weird. That's a 76% discrepancy. Now, Travis is a master trader, right? Then how come he longed into a massive long-term resistance level on a day where it had already rejected that level and was on a USA only news day? Towards the end of the trading session, might I add. You honestly didn't see that 31.7K to the 31.8K level being the resistance of resistances. So you longed into it and lost like $100,000 doing so. And I know everyone's like, oh, hindsight's 2020. You can look at any chart in the past and say you'd have done it differently. Absolutely. And my guess is this is exactly how they got you guys in the protocol, but I'm not even going to talk about that. The only problem with that argument is that I actually took that trade. I longed at about 30K up to just over 31K. I closed out my trade. Then I saw it reject from the resistance at 31.7K to 31.8K level and back test the 31K support, and it pumped back up to the 31.7K level, and then I shorted it. I took home a profit on this move because I understand the most basic of trading levels. This is not rocket science. This was a very simple level to pick out. And no, the XRP news wasn't going to move world markets because, as so many people eloquently state in the comments section when I talk about the SEC, the US is not the center of the world. So you should have known this was going to reject and fall hard. But enough of the new business model. Let's get into the discrepancy in the numbers and the lack of transparency since they made their announcements of a variable APR. But before we get into that, this is exactly why we are pursuing SEC regulated offerings with not only wolfferfinance, but also PreSend to protect ourselves from things like this happening, okay? Just because XRP wins their lawsuit does not mean that everyone is safe. XRP is a coin. It is not a token. It is not a hedge fund. It is not a financial institution, and it is not bringing securities to market unless Unless you want to talk about the ICO that they did with the institutional investors. Absolutely, that could be considered a security. But most of the projects in this market are considered securities, and they are bringing those securities to market. What are we doing? Wolferfinance is a master and validator noding company that master nodes and validates the top blockchains that you've definitely heard of. Phantom Opera, AVAX, Ethereum, Flux, and we will have a potential mining arm coming out in the future. So if you want to see something that is actually long-term focused, that is actually going to be here in 10 years, look no further than Wolfer. And Wolfer actually owns 10% of a revolutionary wallet transaction security software called PreSend that stops cross-chain transactions and losses in their tracks. Think about sending USDC on Polygon to an Ethereum wallet. You potentially just lost your money. Or if you sent Binance Coin to a Coinbase exchange wallet, you definitely just lost your money. PreSend stops this from happening. We have a pending patent. We're going for SEC approval right now. You will be able to invest in the crowdfunding offerings for both Wolferfinance and PreSend in the coming weeks, and we will announce that when it comes to market through Acamona.com. We have now started the week with a negative $124,000 in trading profits, or not profits, due to these staggeringly awesome trades that your bot, an expert trader, DeFi Trav, took. Sweet! Check out the screenshots. Now, let's talk about your audit. Wolf Capital obtained an audit from a company called CryptoPrim.com, which was removed by the auditors due to them feeling Wolf Capital was not being true on their trades. See below screenshot in the Moonarch Telegram channel by CryptoPrim, the owner. This happened on May 29th. Weird. And now you're saying you have an accounting/auditing firm auditing your books. Hopefully they take into account that you're 40% down from the deposits. If not, I'd say the firm is about as legit as a $1 million bill with Dwayne "The Rock" Johnson's face on it. And don't even get me started on this stuff, because we will save it for another video, because these things are absolutely way too bullish to have in just one video. Casino compliance, a ruse to keep your people distracted and a way to keep your money in the ecosystem. A new token on BSC, a further adaptation of the previous point, keeping your money in the ecosystem. An integrated token with the casino, again, keeping your money in the protocol, keeping you busy. Coming out with your own blockchain. Many have claimed this, most have not done it. Or are you just going to fork Binance Smart Chain, copy their chain, and call it yours? Or is it another ruse to keep your investors distracted and a way to keep their money in the ecosystem? NFTs that fund casino development. This is supposed to be a new revenue stream, apparently? And those NFTs have the ability to copy trade. Well, hopefully nobody was copy trading you this week, because they probably just lost all of their money. Now, the crypto debit cards. Pretty sure Stablefund, Furio, we're both trying to do this as well. Read into that whatever you want. The proxy contract. That can be edited anytime. As you said, control the outcome in your PTC AMA. If you don't know what that is, go look up PTC AMA for Wolf Capital on YouTube. It's there. We know that's facts. And your multi-sig is only the two project creators. That's kind of like the whole point of a multi-sig, is so that the project creators can't just run off with everything. But, you know, whatever, that doesn't matter here. So this doesn't actually stop rugs at all, and it also doesn't cover the exchanges, which I think pretty much everybody knows at this point, Trav is the only person that has access to. So with that being said, you still haven't accepted my AMA. Surprise, surprise. I told you weeks ago that I was ready to do the AMA. Your community was screaming for it. Your community was badgering and berating me as soon as I came into your project's Discord asking about the AMA. They've asked for it many times. You actually approached me asking for it. I obliged your request, but you still haven't done it, and I've reached out to you multiple times after you reached out to me. Why have you gone silent on me? If you still want that AMA, feel free to reach out, but I might not take it now. With that being said, if you like content like this, obviously, make sure you smash that like button. Make sure you hit subscribe. Boom! Bang on that notification bell. Comment anything that you want in the relevant sections. I appreciate it. Thank you so much for showing up to this video. I will see you in the next one. Have a good day, everyone.